Are you living in the USA and wondering how people are building wealth through smart investments? In this video, I'll walk you through the most common and effective ways Americans are investing in 2025, from stocks to real estate, so you can decide what works best for you. Let's start with the most popular option, the stock market. Americans love investing in companies like Apple, Tesla, and Amazon because stocks can grow quickly over time. If you're new, start small using platforms like Robinhood, Fidelity, or Charles Schwab. The key is not to time the market but to invest consistently, even when prices go up or down. This approach, known as dollar-cost averaging, helps reduce risk and build wealth steadily. If choosing individual stocks feels complicated, try ETFs or index funds. These investment options combine many stocks into one basket, making them safer and easier to manage. The S&P 500 Index Fund, for example, includes 500 of America's biggest companies. That's why most investors in the U.S. prefer ETFs. They're low-cost, diversified, and perfect for beginners who want steady growth without too much risk. Another powerful way to invest is through real estate. Buying rental properties or investing in REITs, known as real estate investment trusts, remains one of the strongest paths to building wealth. Even if you can't afford a property right now, REITs let you invest in real estate with smaller amounts. Real estate offers two major benefits: steady monthly income and long-term appreciation, which means your property value can grow over time. The next option is investing for retirement using accounts like a 401k or an IRA. A 401k is often offered by employers, and if they match your contributions, that's free money added to your investment. An IRA, or individual retirement account, is another excellent choice if you're self-employed or want more control. Both accounts help you grow your investments while saving on taxes, which accelerates your long-term wealth building. If you're someone who prefers safety over risk, consider high-yield savings accounts or certificates of deposit, CDs. These options don't bring massive returns, but they're secure and give you predictable interest income. Many Americans use these as short-term options to park their emergency funds. Then comes cryptocurrency, one of the most talked-about investments in the USA. Coins like Bitcoin and Ethereum can give big returns, but they can also crash quickly. If you decide to invest in crypto, treat it like an experiment and limit it to a small part of your portfolio. Before you start investing, take a moment to create your own plan. Ask yourself, what's my goal? Am I saving for retirement, a new home, or just extra income? How much risk can I handle? And how long can I stay invested? Once you answer these, start small and stay consistent. Even investing $50 a month can grow into thousands over the years, thanks to compound growth. So whether you choose stocks, ETFs, real estate, or retirement accounts, the most important step is to start now. The earlier you begin, the more time your money has to grow. If you found this video helpful, don't forget to like, subscribe, and share it with anyone who wants to start investing smartly in 2025. One key thing to remember is that investing isn't about getting rich overnight. It's about building wealth slowly and steadily. Many Americans who are now financially independent started by investing just a few dollars every month and stayed consistent for years. Another powerful concept is compound interest. When your returns start earning returns. The earlier you invest, the more this snowball effect works in your favor. That's why financial experts always say, time in the market beats timing the market. It's also smart to diversify your portfolio, which means not putting all your money into one investment type. A good mix of stocks, bonds, real estate, and cash keeps your finances balanced and reduces risk when markets move unpredictably. You can also explore bonds or treasury securities, which the U.S. government issues. These are considered very safe and offer steady interest income. Many retirees in America rely on bonds to protect their savings while still earning some returns. If you're working in the U.S., try to automate your investments. Setting up automatic transfers from your paycheck or bank account into your investment accounts ensures you stay disciplined even when life gets busy. Another growing trend is robo-advisors like Betterment or Wealthfront. They automatically manage your portfolio based on your goals and risk level. It's a great choice for beginners who don't have time to analyze the market. You should also learn the basics of tax-efficient investing. For example, holding your investments for more than a year can reduce your capital gains tax. Similarly, using tax-advantaged accounts like IRAs or Roth IRAs can save you a lot over time. Don't forget the importance of emergency savings before investing heavily. Having at least 3 to 6 months of expenses saved helps you avoid selling your investments during tough times. Education is another big part of investing. Spend time reading books like The Intelligent Investor by Benjamin Graham or watching finance YouTubers who explain how to invest smartly in the US. The more you learn, the better your decisions will be. Lastly, always remember that your investment journey is personal. What works for others might not be right for you. The goal is to find a balance between risk and reward that fits your life. Start small, keep learning, and most importantly, stay consistent. Your future self will thank you.